President Barack Obama addressed the nation last night about Syria as military options are still on the table, but emphasized that he'd much rather come to peaceful solutions if possible. Here to talk about what that might mean for gold is Mike McGlone of ETF Securities US. Mike, glad to have you back in the studio.
Good to be back, Joe.
So Mike, when gold traders, gold investors are looking at gold and military intervention, how are they trying to trade the yellow metal?
Well, I think when you think of gold and geopolitical events, oftentimes it's more of a short-term reaction in the price of gold. We've had that. It provided the diversification returns, and initially, if it got really bad, gold was there to protect your portfolio. But generally, historically, it's really the thing to really impact gold long-term. It's monetary policy, inflation expectations, sovereign debt issues, that alternative asset value it provides to financial assets. And I think the market's kind of looking forward a little bit to that. It's taken out some of the premium, and it's looking forward to these other events coming up, FOMC, debt ceiling, things like that.
Sure, so trading on the fundamentals with gold. I mean, gold has a lot of different properties for a lot of different people. One of them does happen to be the fear trade. But why is it that the fear trade ends up being so short term? Is it because people suddenly realize that just because there might be a little bit of a skirmish in the Middle East or somewhere else that long term gold won't suddenly become the currency of the world? I don't know.
I think it's classic human nature. Buy the rumor, sell the fact. The biggest risk is the rumor, what might happen. And in this case, it looks like cooler heads have prevailed, which is wonderful so far. But gold was there if it's in your portfolio to help provide. I mean, at least it rallied, it provided that diversification when you needed it. But longer term, to invest in gold, you really want to think about diversifying your portfolio, provide that lower volatility and the better returns, and it's the protection when you need it. And it's good insurance, and it provided a little bit of insurance, certainly as we walked into this fear trade.
Sure, and one thing you were talking about is possibly the market already pricing this in, that we've already had these diplomatic discussions, and at one point, the market's saying we might not even go to some sort of airstrike or some sort of war, right? At what point do we just stop paying attention to Syria in the sense that it affects the gold market?
Well, let's back up a little bit. The biggest rally this year so far recently in gold and silver was August 12th, that week, and it was Egypt. And I mean, that week, silver rallied 12%. It closed, I think, around 23 and a quarter, and here we are, right back at 23. So it's back to levels that I thought it was just more of a mean reversion adjustment. Egypt helped kick it up. Syria was the next boost up to 25 in silver, and now we're back in gold and silver to kind of levels we were just a few weeks ago. And I think the market looks like it's taken out the premium. Now it's just looking forward to the next event. It looks like the events in Syria are now over and probably have been discounted back out of the price.
Okay, Mike. Well, we always appreciate your analysis. Thanks.
Thank you.
For TheStreet, I'm Joe Deaux.